Gold crossed 5,000 rupees in several parts of India today. There has been a lot of chatter about asking me whether people should invest in sovereign gold bonds or prefer physical gold. Let's take a look. Welcome back to Berich. Gold prices have gone northward and will continue to grow northward because the world is in a throes of a great recession and will continue to be so for the next 12 to 18 months. So gold will continue to go up, and I will not be surprised if gold breaks $2,000, on the upside in the world market per ounce. In Indian markets, gold is at 5,000 and will stabilize between 5,250 and 5,500 in the short run. Why is it so? Because gold as a commodity has no use. The only use for gold is that it is a perfect hedge and available. It's a rare metal and is a perfect hedge for currency. Thus, poor people prefer gold because they can go and pledge it and take money at an instant. They don't have to submit elaborate proofs, go beg managers for loans. Loan is automatically given against gold and interest rates are very reasonable. RBI mandates that gold loans can be given to 75% of the LTV. Why do I recommend physical gold? In times of extreme emergency, one can take his gold and flee, like what happened in Nazi Germany and what happened in Sri Lanka in recent times. So, when you want to go as a refugee from one place to another place, nothing works like gold. If you are migrating from here to America, carrying 1 kg of gold with you when you leave is a great way to start life in the United States so that you can pledge gold. But this is not the only use. In times of emergency, when cash is not available, gold can replace cash. This is especially true in medical emergency. Nobody can say that an emergency in my life will never come. And this is my main cause for not going for a sovereign gold bond. The other is in America, late 1930s and early 40s, President Roosevelt made it illegal for American to own gold. There is reason to believe that this government or a future government may not honor the sovereign gold bond in times of if there is signs of great distress, as it has happened in the world's largest economy. So, hence, this is better to store gold in physical format so that it is easily transferable and usable. There is a clause where you can borrow against the gold bond, but that requires elaborate practice, and you have to go to the bank manager. Banks have to be open, and you cannot raise money at a jiffy like what you can do in gold. Thus, even though gold bonds give you an interest between 1.5 to 2% in grams, it does not is not advisable to keep money in gold bonds. Another reason is the government does not want you to own gold because there is flow of currency outside. If governments are serious about people not buying gold, all they have to do is maintain a higher interest rate and give the saver a fair rate. When you give the saver a fair rate, then all the money will be lying in the banks. Why governments are not able to ensure that the central banker gives a fair rate is due to the fact that the biggest borrower in the market is the government, and the government spends way beyond its means and is continuously borrowing. A higher rate to the saver means a higher interest cost to the government. Thus, government is very keen that it inflates its way out of trouble and thus keep its interest rate low. For the reasons mentioned above, I would recommend that you stick to physical gold and not go to sovereign gold bonds. The final example I would like to give you is not to scare you. Suppose markets crash to 6,000 as I am saying in the next 18 months and you don't have money but you have physical gold. You have a kg of gold at 5,000 rupees. You can raise 35 lakhs immediately and put it to work in the market and pay off that loan over 5 years. If you have put it in a good collection of large cap stocks, you can hit a jackpot by having it grow 4 times to 5 times from the lowest. This is not possible with a gold bond because markets will rebound quickly from the lows, and it will take a lot of time for you to go and process a gold loan against gold bonds. Gold is emergency cash. Thus, keep it in a physical form. Thank you for watching Be Rich. If you like this video, hit the like button, press the subscribe button in my channel, and turn on the bell notification. If you want to buy my Kindle book, the Kindle link is given below. There's a WhatsApp number for those who want a physical copy. At the very end, those who want to speak to me directly can send a mail to berichenglish@gmail.com. Once again, I thank you for supporting Be Rich.